Maya Bakhai, thank you so much for coming on the 15-minute founder. If you couldn't tell already, we're going to learn everything about you in 15 minutes. So typically we cut a lot of the fluff and we're going to dive right in. And I need to start with this. I heard that your investing career started with an investment in Crocs.
Yeah.
You unfortunately aren't wearing Crocs, but I need to ask, how and why did you invest in Crocs? And is it true? Did your investing career start there?
Yes. My Twitter bio is that I'm like an unofficial Crocs influencer because I've never been paid by them, and there's always opportunity to change that. Okay, so let's see. The year was, it's actually started a long time ago. When I was in college, the Robinhood team, they had sent some representatives over to speak to our investment club. I went to NYU. And so that's when they were still in beta at the time. That's when I first downloaded Robinhood, and I was mind blown. It was like a game on your phone. I was studying finance. I could actually put my dollars to work. And the first stock I bought was Crocs. I bought 10 shares of Crocs. And this was really interesting because when I grew up in South Florida, when I was a kid, Crocs were all the rage, like in the early 2000s. That was the cool thing to do, especially if you were in a summer town. And my parents would never buy me Crocs. Like, they always gave me the Payless and Walmart off-brand ones. They're like, this is insane. They're like, we're not going to pay $30 for this shoe. And so that was my dream, to just get a pair of Crocs. And then when I finally saved up enough money in high school, I bought my first pair to take to NYU. At that point, unfortunately, Crocs were very out of style. And so I came to college literally wearing like the worst outfit possible with Crocs, and I was made fun of. And then I just kept being like upset. At that point, it was almost a bit. It's like, why is Maya wearing Crocs? And then in 2015, 2016, I noticed that Crocs is like one of the only companies that was doing these drops the way kind of high fashion companies were. So they would do drops with like Cheetos and Cheez-Its, and like there was a Justin Bieber collab. They would do these collabs and do limited edition drops. And I was like, this is so interesting. And they were kind of one of the first brands to use social media in a really unhinged way, before any really bigger fashion brands were doing it. And it kept going all the way up until they did a Balenciaga collab. And I'm like, oh my God, this is crazy. And so then when Robinhood came and we're speaking to our school, I'm like, you know what? I looked at the financials. I'm like, this is a really interesting company. So I bought shares. And then during COVID, this is like when the real investment happened, everything had crashed. I was working for an NBA player at the time, and I saw that LeBron James one day was caught in a picture wearing Crocs. And this is like at home culture with a bunch of gibbets. And I'm like, oh my God, like at that, basketball players drive so much of street fashion and culture. And I was like, I quickly was like, wait a second, what's going on with the company? And Ravi, my brother, was in investment banking at the time. We were all working from home. So I had him pull up the terminal, like, what can you find on this company? It was so small, no one cared to cover it. There was no in-depth analysis. And like, I have a finance degree, so I was like, wait a second, it's trading, like, it's very undervalued. The growth was quick. The cultural growth was moving very quickly, and it was all over social media, but then no analysts were covering it. I'm like, oh, this is an arbitrage. So I went to my dad. I'm like, Dad, you need to put all your like Roth IRA into Crocs. Like, they have earnings coming up. He said no. And I was like, you know what? I'm going to do this myself. So I put 20K of my savings into Crocs. I bought like long-term call options, and I was right. Like, they had surprise earning beats for 3 subsequent quarters. I kept rolling my profits into more Crocs, and then use that money to start angel investing. And I built a portfolio of 30 companies of angel investments. And that was my first time being like, oh my God, like, I made this thesis that was like, okay, there's cultural arbitrage, right? Like, if you understand culture, if you understand what's happening in the zeitgeist before the mainstream, that is an investable opportunity, and it can be applied to every sector. Obviously, in this case, it was very like consumer driven, but I think every single sector has a zeitgeist, and you're either part of it or you're not. You're either too early for it or you're late, you're past zeitgeist. And so much of being an early stage investor is timing that. And I kind of developed that muscle with Crocs.
As you described that, I'm picturing your full apartment full of Crocs just sitting everywhere. Very cool story. And I'm glad you actually mentioned that was a segue to angel investing.
Yeah.
30 investments. Many people, founders, non-founders, they see startups, they see people starting businesses, and they hear about this concept of angel investing. There's this picture that flies around of the first angel investors in Uber and the returns they saw. And some people say that and say, wow, like, they got lucky. Others say, no, that it was skilled. Could you actually take us back to those first angel investments you were making? How do you start? How much money do you invest? How do you even approach that topic? It can be very scary for some, and you built that first portfolio of 30. What did that look like?
Yeah, so somebody gave me the advice of investing the same amount consistently. So this is not my advice, same amount consistently into every company when you're angel investing, because it's very different than building like a professional fund, which is like my full-time job. But angel investments, it's like you're really taking founder bets. And sometimes there's a tendency and mistakes. So I've learned this from others of being like, well, this guy went to Stanford, so I'm going to give him 25K. But this person didn't go to Stanford, so I'm only going to give them 5K. And there's this really bad habit you have in early days when you don't have pattern recognition, when you're totally just driving your check size by signal. But in reality, it's the same power law. 1 in 40 companies become unicorns. And so you're just playing a game of bets so I kind of started by just doing 10K into each investment. I did break my own rule in the early days, and I did like some 25Ks. I was like, yes, I'm very bullish, YOLO. And that usually blew up. But yeah, I think getting started in angel investing, it's difficult because it's not that accessible of a category. Like, yes, theoretically, anyone can become an angel investor, but so much of it is your network. You kind of have to be in the right circles to even get access to the best founders. You almost need to find people who are at that caliber where they're in it for 10 years, they're not scamming you, and it's hard when you don't have the pattern recognition. So it is something that's tough. I try to help by like our first fund, we had a $1,000 minimum, and I have 50 companies in my first fund. So I try to get literally anyone who is interested in angel investing. I'm like, hey, use my fund as a way to learn. Read my investor updates. And it was specifically women who did this. Like, they took me up on it. They actually read all my investor updates. They respond. They even follow the companies. They become users. And then when those companies raise more money, they're like, can we invest directly? And that's how they de-risk their portfolio. So I don't think people talk about it a lot. And also most funds don't allow small checks, but there are a lot now with AngelList. A lot of like these emerging managers do drop their minimums so anyone can participate. I think that's a good way to get started. Like, learn from somebody else's portfolio construction and then kind of figure out your own pattern recognition of what works, what doesn't. And the second, I think, is invest in what you know. So the people that did Uber, like, they were in technology. They maybe had seen some sort of, they probably saw like big shift. How do I explain this? They probably did see other examples of founders that reminded them of the Uber founder or vice versa. They probably saw what disrupting an entire industry from scratch looks like. Like, if you've had experience with that, it's easier to get bought, even if the market doesn't exist yet, on this type of disruptive thinking. But how would you get exposure to that network? Like, you need to just be in the game. And so whatever you can do to be in the game is the most important. That makes sense? Yeah.
Yeah. And I want to ask now, you mentioned fund. And what was the transition from angel investments to actually starting a fund? And I have to ask too, I believe the fund's called Spice. So how did you come up with the name? And
Yeah.
it feels to me like another big step to go from, hey, a few angel investments to a fund, more money, more expectations. What did that evolution look like?
Yeah. So there were a few reasons why I turned this into like a true proper fund, but we'll start with the name. So it's called Spice Capital, mostly because, well, anecdotally, my whole career and even when I was younger, I would say, this is boring. Let's add some spice to it. So it's a reflection of my personality and, you know, like taking something and making a story out of it and making it exciting and fun and approachable. And to me, that's spice. And then also, you know, the spice trade was, you could argue, kind of the precursor to modern capitalism and like global capitalism across the world. And so I felt like it had this strong heritage. I'm also Indian, so I feel like it had this strong heritage, but it also had a lightness to it, which I wanted to show. I wanted to show that we're approachable, we have empathy, we're fun. And so that was the why. That was my decision. And okay, I'm going to be even more honest. I couldn't think of a name, and I had to make an investment into this company called Beehive, and I had like a week to do it. And I'm like, fuck it, we'll just do Spice, because that's what I always used to say. But then afterwards, I came up with the whole explanation of why, and it ended up working out. Yeah, so that's the name of the fund. The reason like why I transitioned was, it's very interesting. So venture has become this, this very large asset class. I think because, I mean, if you look at the S&P 500, majority of the companies that are moving the market are all tech companies. So tech is really like the fastest growing category that a retail investor could get exposure to. So obviously there's a lot of interest in the category. But what's changed, I think, or what I saw changing in venture was, because there was so much money drives more, like more liquidity drives more theoretically efficient markets, which drives more information access to everyone. And as more people got information access, you saw this rise of like thought leaders, right, in tech that are writing about blog posts, writing about angel investing. So this whole new batch of younger people started entering investing. But what I noticed is, they were all kind of getting their information from social media, which is good in one way because it democratized everything, but it's bad because you're at kind of the mercy of the algorithm. So the algorithm was pointing everyone to the same blog posts, the same, like every quarter there's a market map of like, here are hot industries and here are the 20 companies. And so everyone's reading the same thing. So I just kept seeing my peer group have insane groupthink. And I was almost like, I wasn't really, for whatever reason, I'm lucky, or I was, I didn't live in the Bay. I had maybe a different upbringing and background. Like I never got caught up in that. But it was very difficult where I would meet a founder who was so brilliant and had such a unique insight that you couldn't find on a blog post, but no investors would fund them because it wasn't something, they didn't have the vocabulary. They weren't speaking they weren't speaking LinkedIn jargon. And I kept seeing this over and over. And that's why I even started angel investing, because I kept finding opportunities like that. And then I saw it again. Yes, I don't know. I think that's kind of the why. I felt like there's so much money, yet everyone's crowding into the same 5 companies every quarter. And like, how do you actually generate alpha? Actually, our fund 1 is called Fund Alpha. Like, that's the legal name. They're like, are you sure you don't want to make it Fund 1? I'm like, yes. Because how do you find edge? Like, you find edge by thinking in a way that everyone else doesn't. And I just didn't see people doing that. And I'm like, oh my God, there's a big opportunity to be like this first believer in a startup that's coming out from outside of the world. And then my job as Spice Capital is to help them become part of the zeitgeist. And like, that was the formula that we pitched. It resonated well with investors. Like, our first investor actually was a founder I had backed at my previous job. And so like, we backed him early. He kind of, when nobody else wanted to believe in him, and he was like, I want to support you. And then we were lucky to have some amazing LPs. Like, we had Marc Andreessen, Chris Dixon, who runs our crypto fund, Alexis Ohanian, like some of the best GPs and investors in the world, the homebrew founders. I mean, it was people who also thought that way, right? Who came up from the old venture, who saw what it was like when everyone wasn't reading the same blog post. That makes sense?
Yeah. Very cool.
Yeah.
I have to ask now, you have built these relationships, you're in these circles with founders who have now started, reached different levels, investors, and something you had mentioned earlier was this concept of pattern recognition.
Yeah.
How at first you don't really have it, but then you build it. So now I have to ask, I actually think that in many things in life, to succeed, you have to be a bit contrarian. You have to do something, you have to zig when everyone else is zagging. Otherwise, you're picking the same thing or doing the same thing that everyone else is.
Or you have average returns.
There you go.
Yeah.
And if you're looking for above average, you have to do something on average or different. From all the founders you've worked with, what's a hot take? What's something that founders do incorrectly, or you think, hey, I see most people do this, but hey, founders I'm picking are founders that succeed, they're doing this?
Yeah. So I think the hot take is the founders that build for investors may have it easy in the first few years. They may be able to raise a bunch of money, but it usually blows up. There's a point where either they themselves can't take the pressure and they end up folding, or they're just never able to hit any milestones because they chose to spend time and build for the investor base. And
what does build for investor mean in this case?
Yeah, maybe I should clarify. So yeah, like more specifically, the biggest mistake I see founders making is that they like the idea of being a founder rather than they have a why. And like my contrarian investing style is my first conversation with any founder is, I probably asked you this too, is like, why are you doing this? What's the story? Like, tell me your why. And a lot of people don't have a why. And that's very important because when times get hard, when your co-founder leaves, when you have 2 months of runway, when you have to pivot and you might not want to, you need to have that why, because otherwise you're just going to give up. And there's a whole batch of founders, especially as venture got very hot over the last, let's say 5 years, that were only building startups because they could. It was like, hey, I went to Stanford. I'm not calling anyone out. This is like a generic assumption. I went to Stanford. I worked at Facebook. I read a blog post about opportunities in AI, and I think I can go build something. guess what? There are very average investors that are lining up to give you money to go start that idea. Do you have any subject matter expertise? Do you have any passion about what you're building? No. Those companies, after 2 years, once that money dries up, they're like, well, we haven't built anything. The founders that spend all their time networking with VCs to help make sure their fundraise is good. The founders that raise their seed round and then say, okay, what do I need to get to Series A? Instead of what do my customers need so they give me more money? Those are the founders that tend to struggle. And the founders that do really well are the ones who come from an industry who have a why. And they might actually not have any VC connections. That's on me to figure out. Like, my job as an investor is to plug them into the Silicon Valley network. What I want from them is to be experts within their field. So if they're coming from industry, if they've done a bootstrap business before in this category and they're like, hey, it's time for me to scale. If they have an insight from their family business into something that no one in Silicon Valley has, like, that is actually the edge you're looking for. So I try to find people who have that genuine passion, have that background. I try to over index for that over, do you understand the game of venture and tech? And I think it's quite easy to understand now, to my point before, where there's so much content out there. And I even feel like I'm getting pitched and someone's reading a robotic script of like what to say to neg investors. And I'm just like, oh my God. And so, yeah, I try to really like break down the barrier. And especially in the last year, I've been asking consistently what the first call is, like a 1-hour meeting of why are you doing this in 40 different ways until they finally break. And they're like, okay, honestly, I just thought I could raise $2 million. And I'm like, great, I'm not the right investor for you. Or it's like, look, I've never done anything involving venture capital, but I'm super passionate about this idea. I don't know how this tech game works, but I know how to build a business. I'm like, cool, that's what I want to work with.
Wow, I really like that. As you were describing that, it reminds me of, I've heard these stories of people who, or a lot of people might say, hey, I want to write a book. And then if you really push, it's that they want to have written a book versus actually write a book. And there's a difference between being a writer and enjoying the writing versus, hey, I have written a book. So when it comes to a company, it's, oh, I want to have started a company or have done a company,
Right.
have been a founder versus actually the building.
Right.
I think there's a line going around from, I think it's Novak Djokovic, and how he said, yeah, I just like hitting tennis balls.
Yeah.
It's like, I'm a tennis player, you get the accolades, but it's the hitting the tennis balls
Right.
that he actually likes there. I want to keep the hot takes going. You talked about hot take when it comes to backing the right founders or founders you think have this why. Let's put the investor hat on. What do you think is something that investors don't do well? Maybe you made the mistake in the past. You mentioned maybe more signal versus the actual pattern recognition, but in today's day and age, what do you think is something that other investors don't really do correctly or you don't see eye to eye with?
Whew, I have a long list of that. I mean, the first is just, I think, venture has become a game of sales versus a game of taste. I don't know how to teach people taste. I don't know what to do about that one. But I noticed that a lot of people have kind of retreated back to, a lot of people say they're early stage investors, but they don't actually want to do what is required at early stage. So at early stage, like, you really have to believe in the founder's vision. You have to believe in a market that may not exist. Like the ride sharing market, going back to the Uber point, wasn't a market. There was no TAM. There was no report I could research on ride sharing. It was created out of thin air. Same with Airbnb, right? Like, that is taste from an investor who's able to imagine a future market that grows to a big size. Like, that's the type of founder you want to be able to back. So I think one thing that, I maybe disagree on with some investors is I really emphasize like this taste and this imagination versus the data, because I would argue that at pre-seed, which is where I invest, or seed, there is no data. And so like, if you don't have the muscle of being good at just like understanding what's going to pop, you're not going to be able to make it. And I think there's a lot of investors that claim to do seed because it gives you it's like they like to be the early investor because it sounds nice. It sounds like you're high conviction, but they don't have conviction. And so like, that's one thing I've just observed, and it just makes my opportunity even bigger. I think more specifically, one mistake I see investors doing is they don't treat founders with respect. It's like they ghost them that we know about this, but a founder will pitch them and they just ghost. Like, that is so rude. Come on. Someone is pouring out their heart and soul, their dreams, ambitions, and you're going to ghost them. I see that a lot. It's almost like they're better than them. They're not worth their time. That really rubs me the wrong way. Like, this is such a long-term relationships game. And if if you treat someone like that, they always remember. Like when you're on the other side of the seat, when you're vulnerable, I've had to fundraise for my fund, you've had to fundraise, like, you know what it's like when someone just, it's totally rude. So that's something I don't like. And then the other thing is, I don't think they really give founders the time to listen. So the founders are the experts. I've been on calls, like collaborative diligence calls, where the VC is talking for 30 minutes of the call, 30 minutes of the 1 hour meeting. It should be the founder talking for a minute. Like, it's your job as a VC to be a listener, to be listening for insights, to be pulling out insights that the founder doesn't even know they have. That is the job of a good investor. It's like listening, pulling insights, pattern matching it, imagining those insights to become a large market. And I feel that so many people have become lazy, where they're relying on external validation, external signal, other people's blog posts, other funds' market maps to help them with their investment decision. That's a function of too much money in the system. As money pulls back, you kind of have to be high conviction or you'll get wiped out. But that's what I think are some mistakes. I can have a whole list, like a whole hour. That's a different podcast.
Part 2, we'll cover more of those. I now want to flip the script on you.
Yeah.
You mentioned earlier that first call, you want to understand the why from the founder's perspective. So I want to ask for your why now. To make it a little simpler, there are usually 4 main things that drive someone at any point in time: money, power, pleasure, or fame. Now, usually it's a combination, but if I had to ask you, hey, at this point in your life, what is the main driving force? What would you say it is? Money, fame, power, or pleasure?
So I grew up doing a lot of performing arts and singing and dancing, and I was like an all-state singer, and I wanted to be a pop star. Like, and I went to NYU maybe with this dream of, maybe I'll connect with somebody who's in music and we'll make a song together and it'll turn into this whole thing. And I've always been, one to support my friends early, my creative friends, before they take off. And so if I'm being honest with myself, it's probably fame. I don't think I'm motivated by money. There are way better, I'm in the slog. I'm like doing all this myself. There are way better ways for me to make, I would just be a Crocs trader full time, like give me a hedge fund. I think I'm really motivated by more so fame and power, because I'm addicted to being a champion for others. Like, I'm so addicted to, and maybe I think it is fame and maybe ego, where like I like being the one that's like, I discovered that person early. I've always been that person, like, oh, I found that artist before anyone else, And so that is the ego and fame driver, as opposed to money is more, I find that the people who are driven by money are more like, how can I build the biggest, if they were in VC, they'd be like, how do I get the most AUM possible? How do I have a $10 billion fund in 5 years? Like, what do I need to do? They don't really care about the deals. It's like the ends justify the means. I'm really about the process because I want that story to come out of it. Yeah.
Love it. I appreciate the candor too.
Yeah.
We'll have to see.
This is therapy, actually.
We'll have to see in 10 years, 20 years how that changes. But to wrap up now, I do want to learn a bit more about you. I personally find these things interesting. If you could come back to your childhood or your upbringing, you mentioned, hey, maybe dreams of being a pop star. Hey, things can change. There can be second chapters in careers. This is the first chapter.
True.
What would you say is one of the biggest lessons or pieces of advice that you got from your parents growing up? Parents and how we grew up obviously has a huge influence. It shapes a lot of what we do today. If you could think back, what was the most seminal piece of advice or a lesson that you got from them?
Yeah, I think I am so lucky. My parents were so they told me from a young age to be different. They literally said that all the time to us. It would be somebody's birthday, it'd be my dad's birthday, and I'd go to my mom and say, Mom, can I go buy a card from, Hallmark? What is it, Hallmark? I said Hallmark. Yeah, I was like, can we go buy a card from Hallmark for Dad? And she's like, no, make it yourself, like, be creative. She's like, figure out a different way. We had a scrapbooking class, I remember. There's so many examples where they're like, just figure out your own way, be different. And they taught us that in every form of life. They're like, and my mom told me from a really young age, she's like, you're never going to win people with your looks. Like, you have to win them with your effort and your smarts and your curiosity. And she pushed us to always find a way to impress people with our hard work, with our outside of the box thinking. And so I think just having that in your mind from a young age, to not be afraid to be different, to try a different path than everyone else. Now we call it finessing. My mom specifically, but both of my parents, like, really set that culture for me and my brother to think outside of the box. And it's translated into my career in so many ways, where there's a path that everyone else takes. And maybe sometimes it's gone too far where I'm like, this is a boring path. Let me go a different way. And sometimes maybe my flaw, since we're doing therapy, is like doing the more complicated way in the spirit of being different. But for the most parts, it helps because people remember when you put in effort. Like people can tell, it doesn't matter. People talk about AI, taking over everything. There is like this human to human sense when something is authentic. And so I really like to lean in on that, and I thank my parents.
I love that. Something I say all the time is normal is a dishwasher setting.
Yeah.
And I think when we grow up, we naturally want to fit in.
Yeah.
Because it's wired in our hunter-gatherer
Yeah.
days where if you aren't part of the tribe, you sleep outside and an animal attacks you.
Yeah.
But not being normal and being different is how you stand out and how you do something that's not average. So I completely agree there. Another thing I want to ask, personally curious, is it sounds like you work hard. You have a lot going on, managing multiple companies, yourself, the fund, the marketing of the fund, the marketing of yourself, everything. I want to hear what a typical day in the life looks like. So I would love to hear, like, what time do you like to wake up? Do you have a morning routine? And then how do you structure your day to balance all these different things?
It's a good question. I definitely don't have your morning routine. I wake up around 6 or 7 a.m.
With an alarm clock or without an alarm clock?
With an alarm clock.
Okay.
So I am someone that needs like probably 7 hours of sleep. If I stay up late working, I just will miss all of my alarms. Like I have to get my sleep. There's nothing you can do. Like unless somebody is physically there pushing me to be like, wake up, I will just sleep like a rock. So I really, really need my sleep. And I think that's what's kept me high energy during the day, just having that peaceful sleep. So I always sleep 6 to 8 hours. I can do 10 hours any day, like you just tell me. And I guess my morning routine is I have coffee first, which I don't know if that's good or bad.
How do you like your coffee?
Black, just like black drip coffee, nothing crazy. Have a coffee and then do some sort of movement. So I'm just starting. I used to do it, but I stopped for a while. I go really hard on things. Like I had a phase where I was training for a marathon and I would run every morning. Then I had a phase where I became like a certified yoga teacher. So I was doing yoga like this past year a ton. Now I'm in a phase of I'm doing strength training. So I'm doing like 3 times a week strength training and the other time Pilates. But it's nothing long. It's like 30 minutes of movement. Like that's really important to me. It's my most favorite time because I don't have to look at my phone and I don't feel guilty about it. And I come up with a bunch of ideas. And then, after that, shower, get ready. And the life of a VC, someone else mentioned this to me. This isn't my words. It's a prioritization game because you pretty much open your computer and you have so many stakeholders. You have your investors, my fund investors called LPs. I have my current founders. Like now it's, almost like 80 people I've backed over my career who have my phone number, who can be like, this drama and fire drill is happening. What do I do? Can you help me? I'm fundraising. That's my second stakeholder. Future founders, people I'm tracking that I want to go pursue proactively that I think are undervalued. And then future investors that I want to invest in me long term. So at any given point, you have these 4 stakeholders and it's really a service business. So they can call you at any time and you have to be available at any time with very high energy. So a lot of this is prioritizing day by day, what day, on this day, what is the stakeholder whose call I'm going to answer or which stakeholder am I going to push through. And we have I have no meetings on Monday. So I do all my internal work. I try. And then on Wednesdays, we have our founder catch up. So every single person I've backed every 2 weeks, we have a call set up. Like they rotate on Wednesdays. And the rest of the days, I feel like I'm just fielding things all day and just swatting things down. Or what is it called?
Whack-a-mole.
Whack-a-mole. I'm like a whack-a-mole. I'm like, Lord. And I just keep doing that as long as I can until it's 8 p.m. And then I'm like, okay, sounds good. And then my only other life hack is I don't go out on Fridays. Friday is my favorite day. I catch up on work on Friday because that's the only time that nobody will call me and ask me questions.
Wow, that is good.
Yeah. And so it's a nonstop. I think I guess it depends what stage you're in, but starting a fund is a very nonstop thing because you have these 4 stakeholders that you have to keep selling and because it's a service business. And I think people really forget that service business doesn't scale. So yeah, it's interesting.
Okay. Well, let's actually go off that. Service businesses don't scale, but what's the vision you have for Spice and what's next? If it is, is it not scaling it or are you going to scale it your way and what does that look like?
I'm going to scale it differently to how other people, to keep it a theme. But yeah, I have a vision to scale it in a different way. So For us right now, we have one fund. We're going to launch a second fund soon. And these are more, kind of generalist funds. What I realized in investing, like 75% of our deals in fund one were sourced by other founders I've backed. So it's very much this game of, if you are somebody's first believer, then when their best friend is starting a company, they're going to say, hey, nobody else believed in me but Maya. You should talk to Maya. And like that is our whole, we have this ecosystem. We have a group chat called the Spice Jar, where there's like now, 50, 60 people in there talking about, it's a very wide range of topics, like making fun of blog posts on Twitter, all the way to what are you guys using for payroll, right? And so I just like learned from my founders. I think I put them, if I had to prioritize my stakeholders, I prioritize them. Like if one of my founders I back calls me, I will answer it immediately. I'll drop everything. Like that becomes my priority no matter what I can do. Because like they've helped me get off the ground. I think I'm grateful to them. They let me give them money and be their early partner, as opposed to, like the who's who of Silicon Valley. And so I think I value them a lot. When I think about the future of it, I want to incentivize, I want my founders to be part of this journey with me in a way where, so my dream is, to be specific, is to have multiple funds that are thematic and where I'm partners with the founders. So let's say, I'll give an example. Like I haven't asked him this yet, but I'm just going to put him on the spot, like Tyler from Beehive, right? Let's say we do a creator specific fund. It would be great to have Tyler as a partner on the fund and have his expertise, his network, and attached to mine. And like, I know the exact formula of how to set up a fund 0 to 1, but I would love to have other people for specific verticals. So that's kind of my vision. And then just keep over time, like just keep doing it. Keep being that first check. The brand gets stronger and stronger. I think there's a big opportunity to do early stage. And that's it. Does that make sense? Yeah.
Makes sense. And then I guess after that's the pop star journey, or this.
Yeah, exactly. I mean, in a different world, like, we launch the second fund and I start the music career. I've invested in a company called Symphony, which they're now doing like all SMBs, but they started originally helping artists launch their career, and they do one-click ads. So they've helped, they work with Tinashe, SZA, Travis Scott, the who's who. So I was like, my double motivation for investing in you is you need to pump my streams. Like, let's get it popping. So that's my backup career if things go south.
All right. Last thing I want to finish with is something you said earlier, which resonates, and I'm sure it will resonate with many aspiring founders listening at the earliest stages, it's very scary at the beginning, and they're talking to an investor for the first time, and some investors might not listen. Others really want to understand, hey, why are you doing this? And you like to figure out the why. What's the biggest piece of advice you would have for someone who's at that early stage? Maybe they're on the fence of starting. They maybe don't fully believe in themselves. They're looking for that first backer. But what advice would you have to a founder who feels this itch to start it? Maybe they haven't read the right people. They're not in the right circles or in the right room. But what advice would you have for them?
The advice I would give is you are going to be your best advocate always. So I don't think you should start something until you can convince yourself. Like if you can't convince yourself, you'll never be able to convince others. So something I suggest to people that I meet where they have the itch, I can tell they're waiting for someone else to say yes for them to get started. That's usually not the step one is you have to convince yourself. You have to be your own advocate. No one's going to believe in you if you can't believe in yourself. And so what can you do to actually convince yourself? What can you do to, if you have a maybe lower risk threshold, what can you do to de-risk your idea? Can you run ads? Can you run ads, make a landing page and say, hey, I'm starting a business. Let's see if people want what I'm selling. Can you make a TikTok and share your story? I've seen that, right? Like you leverage social media to tell your story. The beauty of algorithmic feeds is it takes it to your audience. So kind of talk about what you want to do and see if people are resonating. Like you have to feel that pull from your customer, your user, your partner, whatever the business is. The more you can de-risk that, the more confident you'll feel. And that shows. And you also have data points when you're talking to people. But yeah, I think my advice is spend a lot of time convincing yourself. Like I took 1 year. I have so many unfinished Google Docs literally titled, "Why am I starting a fund?" And then when I was like starting my second fund, I did the same thing for 1 year. And I made I have, again, a bunch of unfinished Google Docs that are like, why am I doing a fund too? And, it's pretty it's pretty important to convince yourself, and because you can look back on that when times get hard.
I love that. Okay, now I want to help blow this up for others because people will listen to this.
Yeah.
Maybe now, maybe in a few years.
Yeah.
How do people reach out to you? Should they reach out to you? Do they need a warm intro? But what's the best way to get in touch?
Yes, my inbox is unfortunately very open. I'm Maya at spicecapital.vc. And you can follow us on Twitter, spice_cap, Instagram, spice_cap, every social platform, we're spice_cap. Yeah.
And are there any specific types of founders or verticals you look to invest in?
Yeah, so right now we have 4 categories that we're focusing on. So we do blockchain, fintech, creator economy, vertical SaaS, and applied AI. Those are kind of our 4 categories. But if you're somebody who's just like, nobody believes in me, I believe in myself, I'm onto something, you have the itch, kind of everything we talked about, like you have a why and you want to do it for 10 years. This is something we didn't talk about, but if you're going to take venture money, there are other ways to get money, which I think people forget about. Venture just has a lot of publicity. There are other ways to start something. There are other forms of capital. But if you're going to take venture money, remember, and I don't think they talk about this or realize this, you are probably in it for a 10+ year haul, right? Average, like the fastest someone IPOs is maybe 7 years. So at minimum, you're at 7 years. And most institutional large VCs essentially expect you to be and nowadays I would say like with inflation, a $10 billion company, which means you need anywhere from, the time of recording is June 2024. The market sentiment is you need to be able to have $400 to $500 million of revenue to be able to go public. So just know that's what you're signing up for when you're like really taking venture money. And if you think that you don't want to do it for that long or your company can't get that big, then there are other forms of capital. And I'm even happy to chat about that too.
I love that. What a great way to finish too, where you have to believe in yourself before anyone else will believe in you. I do think oftentimes people do want someone or it's really powerful to have people who believe in you more than you feel like you believe in yourself or that first backer. But I think in many things, belief comes before ability. You have to believe you can do it. Then you do the thing. It gives yourself the vote of confidence. And then that confidence spiral just starts to spin.
Right, you're right. And like a lot of it is around getting your customers to believe in you, right? Like if you can just sell one person on whatever product or service you're selling, that will give you the confidence. And I think this is what I meant in the beginning when I said, build for your customer, not your investor. Building for your customer actually, it does 2 things. It gives you confidence, but it also literally gives you money. Versus building an investor, it's not your money. They're funding an entity where you're an employee, essentially when you're a CEO. And it's like an indirect way of you getting confidence. It's a false signal. And people really forget that. If you just built for your customer all day, you would be so happy.
Yeah. Love it. Thank you so much, Maya.
Thank you so much for having me. I'm very grateful.